Hello and welcome to a new YouTube video. So today what I'm going to do is I'm going to break down my gold trade that I took this week. Closed it out yesterday for 1.7 hour profit, and here it is on screen as you can see. Let's go into the 1 hour and I'll show you the trade. So this is the trade right here. Now I'm going to go in depth from top to bottom, why I took the trade, the confluences, and how it played out. So just to give you guys a real good insight into exactly what I'm doing, how I do it, etc. So let's get into it. And we're going to start up here with the fundamentals, because that is the first thing that I look at in my trades. I look at the fundamentals to give me direction. So the fundamentals on this trade are quite interesting. So basically, we have to look at the US dollar. And because obviously this is XAU USD, so we're essentially, the dollar is a huge factor in this, right? So the first thing with this trade is that we had a very strong US dollar going into this trade. So I'll take you to the Dixie so you can see what we've had on the US dollar. Look at this trending market on the US dollar, right? Up, sideways, up, sideways, up, right? Continuous nice uptrend since the start of 2024. And I've been playing this dollar strength since the start of the year. And therefore, I was anticipating that we would see some downside off the back of this dollar strength, okay? And the reason we have had this, so the confirmations on this dollar bullishness and gold, I'm not going to say gold weakness, but lack of inflows into gold has been the following. So number one, strong US economic data. So that's number one. So strong US economic data. The reason that is so important is because not only does this strong economic data mean that rate cuts are less likely or that rates will be higher for longer, strong US economic data also reduces recessionary fears, which is basically means less inflows into gold. So that is a very, very important point. The strong US economic data was a critical fundamental driver in this trade. The next thing to note is that no new war escalations in the Middle East. I'm just going to say no more war escalations because that includes Ukraine and the Middle East. So there's been no new war escalations, which again means there hasn't been any major flows recently into gold. And then the other thing to note, I'll actually put it in at number 2, is I'll put this number 3. The other thing to note is hawkish Fed tone. Hawkish Fed tone. So again, a hawkish Fed tone is bullish for the US dollar and bearish for equities. So those are really the 3 key fundamental drivers on this trade. So these gave me the impetus to say, okay, cool, I'm going to start looking to short gold. I'm just going to be looking for shorts, right? So longer term, I am bullish. I'm a gold bull, but in the medium term, I'm going to be playing off of this fundamental economic data. I'm going to be looking to short gold and to take it lower. And what you can see then, so that's the fundamentals out of the way, right? Now let's look at the technicals. So I'm going to start on the daily chart here. So an important thing to note on the daily, which I took as a major sign or confirmation to my bias, was when we approached, I love to see this in the charts, when we approached these highs over here to the left, as you can see, we approached these highs and look at what price did on the daily, right? Came up to this high, tagged it, and then snapped away, right? And to me, when you see this kind of thing, it's a very, very strong sign that price came up to this high, took the liquidity, tested it, but was unable to break through it. And you can see again, look at these rejections. We've got 1, 2, 3, and then a final one right here, all up and around the 2050, etc., up in these highs, right? To me, this was a sign, especially when we got this one. Oh, awesome. I think we're gonna come back up. Exactly, I'll go into the 4-hour. When we got that rejection from those highs, this one right here. Let me just get back here. We had this rejection from the highs and we moved really strongly down like this. That was my confirmation that, oh, cool. I think we're going to see a retest and then continuations down, right? So, yes. So now that's the higher time frame picture, right? Rejecting multiple levels up and around the high 2000s or the 2100, 2050 mark. Multiple rejections from this level. So when we got this strong move, again, that was a nice break of structure which confirmed my trade. And then once we had this higher time frame shift in market structure right here, I was then looking for my entries on the 4-hour and I went even further into the 1-hour. So it just shows you how I start on the fundamentals, I get my bias, then I look for the higher time frame technical confirmations, and then I head into the slightly lower time frames, not very low, just the 1-hour, 4-hour, for those confirmations to really enter the trade. And again, as you can see, this was that downward movement, right? This was the sweep or strong rejection area that we had. And from there, now I was waiting for the retracement to see if I could get an entry. And but again, it's the exact same thing that I love to see. We came up to this high and I was waiting to see how would we react from this high. And lo and behold, we came up to this high and we wicked away really strongly. And to me, that was my signal. That was all I needed to know to get into this trade. That is exactly the thing I look for. I look for price to come to a high and reject away when I'm bearish, or come to a low and reject away when I'm bullish. And that is exactly what we got. So when we got this rejection off of this 1-hour candle here, you can see that. So we came to the high, closed back in. On this candle right in here, I'm going to zoom right in. On this candle right in here, that is where my entry was taken. And so I just entered in, as soon as it started to come up a little bit, entered in. I would have entered in anywhere on this candle, really. I was waiting for this to close bearish. It closed bearish. Now I got in on this candle. And I am not a trader who is going to be playing with really tight stop losses and having my stop loss here. That's just not something that I do. Obviously, if I did that, I would have hit a huge RR in this trade, but that's not the way I like to trade. I prefer to have a slightly wider stop loss, and I base my stop loss. Again, this is an additional insight into my strategy, my swing trading strategy. I like to base my strategy. Oh, what the fuck is that? I like to, let's get this up here. Okay, 1 second. There we go. I'll put it back down here. All right, so I like to base my stop loss off of ATR, which is the average true range, right? So essentially what this does is it accumulates, this is the 14 ATR, accumulates essentially the size of the ranges of the previous 14 candles and it plots on the graph, right? That's all it's doing. So it's giving you a gauge of how big the ranges are, and I use that to then base my stop loss off of that. So when I got this entry right in here on the 1-hour, I got it right in here. So I put my stop loss behind this high plus 4-hour ATR. So you can see here that the 4-hour ATR in this moment was right around 100 pips. Okay? Was right around 100 pips. Obviously, this was the entry right here. But I like to go kind of in the midpoint of this. Right? What roughly is the range of the high point is the mid? What roughly are the ranges we're looking at? We're looking around 100 pip ranges, etc. 100 to 90 pip ranges. So that is the data point that I use to then place my stop loss. So let's go back to the 1-hour. I took my entry, stop loss behind the high, plus 100 pips. So you can see 50 pips plus 100 pips. That is 150 pips. So stop loss right there, and then target the low right here. And the RR came out at exactly 1 to 7. So my entry was probably slightly higher. It was about there, I believe. So yeah, exactly 1.7 RR. And as you can see, I'll just finish up this video with how I managed this trade. So I got the entry, and as you can see, really pinpoint accurate entry. We just straight away came down. And as soon as we had this strong break of structure down, absolutely perfect. That gave me the indication that, cool, I can now tighten my stop loss. So I went ahead and tightened my stop loss. I moved my stop loss behind this high. I then went and moved my stop loss again behind this high. And then again, I'll just use this behind this high. And then finally, I moved my stop loss behind this high. And very lucky for me, I did not get stopped out right in here. I didn't actually end up getting stopped out, which is quite handy, obviously. And then price just slammed straight to full TP. So that is that, guys. So you can kind of see the exact steps that I go through. Fundamental analysis, then I look hard time frames, and then I go into the 4-hour, 1-hour chart to just capture a swing movement. Not targeting anything crazy, just targeting the most recent lows. And as you can see, this trade then continued on further with the CPI that we had today. But anyways, that doesn't concern me. I got my piece of the pie, and that's all I'm concerned about. So I hope you found this video insightful. If you have any questions about exactly, more details on the trade, etc., ATR, whatever it is that interests you, let me know in the comments. Shoot me a DM and subscribe for more videos exactly like this. I'm going to be breaking down every trade I take. I'm going to be breaking down fundamentals, various trading concepts. So give me a follow if you're interested in that. Thank you very much for watching. Goodbye.